Good afternoon, and welcome to How Financial Institutions Can Embrace Change in Times of Uncertainty. Any effort to transform an organization requires a strong change management strategy to be successful. In today's webinar, we'll focus on creating a culture of change. We'll also learn how to sustain that culture through uncertain times. Thank you for joining us. I'm Emily McCormick, the Vice President of Research at Bank Director, where I coordinate and execute our research projects, including our annual surveys and ranking banking study. I also write for Bank Director Magazine and BankDirector.com. Today's webinar is brought to you by both Bank Director and nCino. Bank Director has served as an information resource to the financial community since 1991, focusing on the strategic issues that matter most to bank C-suites and boards. Through its bank operating system, nCino works with more than 1,200 financial institutions to help them achieve revenue growth, greater efficiency, cost savings, and regulatory compliance. We are offering continuing professional education credits for this webinar. In order to qualify for CPE credits, you must be in attendance for the full and complete webinar, and you must participate in all 3 polls. If you want to receive CPE credit for today's webinar, please email Shelby Lee at slee@bankdirector.com. Certificates will go out 2 to 3 weeks following the webinar. Now, before we get started, I have just a few more things to share. First off, you've joined this webinar in listen-only mode, so don't worry, we can't hear you. We do recommend that you click on the slide bar at the bottom of the screen. That will allow you to adjust between the presenters and the presentation as you prefer. If you have any questions for our speakers, please note them by clicking the Q&A button found on the right side of your screen. You can do this at any time during the presentation, and we encourage your questions. Once our presenters have finished with their talking points, we'll have a Q&A period where those questions will be addressed. Now, there's no need to take detailed notes unless, of course, you prefer to. We'll share the presentation with all attendees within 24 hours via email. It will also be available on both BankDirector.com and nCino.com. If you have any technical issues, you can note those using the moderator chat feature on the right-hand side of your screen, and we'll do our best to take care of it. Regarding our polls, those will also appear in the sidebar near the Q&A button. When you've selected your answer, just hit the vote button to submit your response. And finally, the opinions expressed in this webinar are those of the individual speaker only and do not necessarily reflect the opinions of the other speakers or of the entities with which the speakers are associated. So with all that, let's talk about our speakers today. Greg Thompson is a Senior Director, Adoption Services at nCino, and he spent more than 30 years as a change agent in the banking sector. He has an extensive background as an executive at banks large and small, and he joined nCino in 2019. Adam Bonanno is the Chief Technology Officer at Bryn Mawr Trust, where he's responsible for technology strategy, operations, security, analytics, and project management. With that, Greg, Adam, I'll kick it over to you.
Thanks very much. It's great to be here with everyone and talking about change management, which is probably a topic that all of us have had to get really used to in the last year or two. You know, we've all used words like unprecedented or surreal or challenging as it relates to describing what we all went through in 2020. And quite honestly, 2021 is shaping up to be a doozy in its own right. There is constant change that's being thrust upon us, and some change we choose to take on ourselves. But one thing is crystal clear, and that is how we adapt to that change. The act of managing that change has never been more important. And this is especially true in the financial services industry. The financial services industry has played a very unique role in helping our nation and our world adapt to the pandemic that we all have been experiencing over the last year or so. And so it's really important that financial institutions understand how to manage the change, again, that has been either thrust upon them or that they choose to take on themselves in response to constantly changing conditions. And while every institution is different, those who were most successful in the most recent pandemic and the challenges that came with that were those that did two things really well. They deployed digital technologies to help their customers and their employees feel empowered to manage the change that was going on around them. And secondly, they embraced a culture of change management. And I'm thrilled to be partnered here today with Adam Bonanno of Bryn Mawr Trust, who I think is a terrific example of a company that did both of those things well. Embraced digital technology and embraced this culture of change management. So with that, Emily, I think we're ready for our first poll. Absolutely, Adam. Here's our first poll question. So vote early, vote often. How has working remotely impacted your ability to serve your customers or your members? So that poll is live right now.
And I'll just kind of chime in as people are voting to help give you my take on it. I don't want to influence anyone's decision, but clearly, working remotely has been a big change for all of us over the last year. I think overall, we were well prepared at Bryn Mawr Trust. We were fortunate that we had already started, remote working with a lot of our employees. Obviously, we went to having, 10% of our employees doing it to about 80% of our employees doing it. So that was certainly a big shift. I think there were some bumps along the way, with printing and business processes that were used to being a little more paper-based. We had to figure out how to get through it, but at the end of the day, we were able to serve our customers well through it and learn a lot along the way.
Yeah, that makes perfect sense, Adam. I think this is a case where there were a lot of people who may have had some remote capability, but then, what do you do when you're thrust into a situation where many people need to work remotely, and you had very little warning that was coming?
Yeah, like I said, there's always some unique situations. For 90% of the employees or 80% of the employees, it was pretty seamless. But then you have people in the care center that are answering phones that need to be recorded, people that are handling much larger volumes of paper than they could handle on their home printer, and that we'd want to from a security perspective and allowed using their home printer. So we were able to navigate those challenges quickly, fortunately, through a lot of hard work and late nights and a lot of partnering with business folks. But
yeah,
we got through.
So this poll has ended, and maybe not surprisingly, Adam, to your point, 3/4 of the folks, 76% of the people, said it took a few weeks to work out the kinks. That's not surprising. But what I think is kind of interesting is 21% of the folks said that transition was simple and seamless. So sounds like we've got a lot of folks that were very well prepared. So let's start at the beginning and just understand what is change management. And our work with change management, we find that word can mean a lot. That phrase, like as two words together, can mean a lot of things to different people. So let's talk about how we define change management for purposes of this discussion. So what is it, and why is change management relevant? Change management is a process by which institutions can become smarter, more efficient, and actually just have employees and leaders prepared for new technologies like digital workflow. We like to say change management ensures that people are ready for the technology when the technology is ready for the people. So it's not enough to just say, hey, I'm in charge. We bought this new technology. We're going to put it in place. You'll go to training. Now use it. For something that is potentially as transformative as some of these new digital technologies are, you have to do many things to get people ready for what's coming, and not only let them know kind of what it is and how it fits with the broader scheme of what we're doing, but let them know what's in it for them, let them know how you're going to support them after the fact, make sure they're ready, and not only ready, but excited for the new technology. So when this pandemic started in early 2020, financial institutions that already had some sort of a cloud-based technology in place were able to work very quickly to work remotely. Very quickly were able to work remotely and allow their employees to work from home or from wherever they were to take care of their families and that kind of thing. And we believe that's a kind of experience that illustrates the importance of of having digital technologies at the ready so that they are just part of how you work today. So whether your institution is planning a major transformation for 2021, or you're hoping just to weather the last few months of this uncertainty and figure it out later, the best time to start talking about change management is right now. We also have a saying that it's never too late to start talking about change management, and it's also never too early, because the fact is your customers' needs are going to continue to evolve, and your business processes are going to continue to evolve to meet those customer needs. So this conversation around how do we get our leaders ready to lead differently, how do we get our people ready to do their work differently, is the conversations that involve change management, getting all those people ready and prepared and continually equipped for that change. And the truth is those conversations never stop. They may start when you're thinking about this digital transformation, but they're ongoing. So when you consider a business transformation, some sort of project that's going to help you adopt some new software or a new way of operating in your business, there are several steps to think about when you're talking with leaders in your company or with stakeholders. It could be your customers, it could be your board of directors, that kind of thing. So as you start that conversation, you need to make sure that you understand what's in it for each of those stakeholders and why this change is important and how it fits, like I was saying before. We believe that change starts with getting your leaders aligned and on the same page about how this is going to impact the overall strategy of your company, how it fits with the overall vision, whether you are an acquiring company, whether you are focused on organic growth, whether it's about efficiency or revenue growth or just overall process improvement, risk management, whatever the thing is or the things are that are important to you, it's important to be able to describe how this digital transformation fits with all of those things and not just assume that everyone knows what that is. At nCino, we have a way of boiling that down, that business case for the digital transformation down in such a way that the leaders develop one sentence that describes why this transformation is important and how it fits. So rather than having a 20-minute PowerPoint deck, boil that down into one sentence that's simple, elegant, it's a jumping off point for other conversations, something that everyone could relate to and understand, whether they are a customer, an employee, or another interested party in your business.
Yeah, I would just add that I can't emphasize enough the importance of getting that buy-in from all stakeholders, like you're saying, Greg. And in my experience, one of the things I like to talk about, especially with our core team, is that there's always a difference between change done to you versus change done by you. If you want to get people bought in so they feel like they're part of the change, and change isn't just coming down from on top, it's, Adam's here, Greg's here, telling me I got to do my job different. That's going to be a really difficult thing for people to accept. You got to prepare them for the change, like you're saying. You got to help them understand why it's going to be important, create that sense of urgency, help them see the vision, and help them really participate so they don't feel like it's just change coming from above. Because often, in my experience as a CTO focusing on technology, people think I'm just going to come in and start talking about the tech and how everything plugs in. But that's like the last thing I want to talk about. I want to talk about why are we doing this? What's the purpose? Who's going to be impacted by it? Whose jobs are really going to change? Because those are the people you need to get buy-in from really early and start involving in the process as early as possible.
Yeah, Adam, that's a great way to say it, because we think it's important to say this is really not an IT project. This is a business transformation. And
Yep.
So if you talk about it like an IT project, it'll probably go down like an IT project. But if you talk about it like this is bigger than just the software or the tool, this is about transforming our business to be something better than we have been in the past and than we are right now. It changes the way people think about it. It changes the way people compartmentalize what we're doing and why. I like to say that it's people that transform businesses. The technology just enables the transformation. So, if you focus first on the people and making sure they understand the why, they understand how it impacts them, like Adam was just saying, it leads to a much more successful transformation, not just at the go live, but beyond. So with that, we've got a second poll question. Opportunity to vote again. The second question is from 2020 until now, how has your institution's digital strategy shifted? And you've got 4 potential answers here. So how has your digital strategy shifted? Essentially, think about it since this pandemic started.
Yeah, so I'll jump in while people are voting and give you my perspective. For us at Bryn Mawr Trust, we were already heavily headed down the digital strategy where we were focused on leveraging cloud service providers such as nCino for our client onboarding and new products and service onboarding. We were moving to Microsoft Azure, actually planning to close out our data center in about 18 months starting at the beginning of 2020. And it really accelerated in the long run. There was certainly a little bit of pain in the March timeframe when we had to move to full virtual, and there was certainly a lot of extra work around the PPP cycle right after that we hadn't planned for in 2020. But the end results of people accepting the digital change happened much quicker than we had anticipated. It's one thing for me encouraging people to use WebEx and Teams and these different technologies. Another thing where they actually physically can't go to the office, so they have to use them. So in that sense, it actually helped, I'd say, accelerate our strategy in a lot of ways.
Yeah, that's right. The imperative that's just all around us, right? I mean, the truth is, I think all of us changed not only how we work, but how we live. I mean, I know for the first time ever, I ordered groceries online. I had never done that before. But now that's kind of part of how we shop for groceries. So it actually changed a lot of things about how we live our lives, not the least of which is how we bank and use our credit unions, that kind of thing. So this poll has ended, and it looks like 2/3 of the folks have said that looking at or they were looking at or have implemented larger digital projects, with about 1/4 of people saying they were looking at or have implemented small projects. So it looks like that essentially everyone has done something that is digital related in response to what's happened over the last year. Few people haven't done anything, but I think for most folks it felt like they needed to do something, and they did. So Adam, I'd love to take a minute and just talk about your experience at Bryn Mawr Trust. I mean, you guys were talking about a digital strategy for some time, and I love the way you talk about the strategy, because although your background is technology, you are talking about it as the whole business person, talking about how it's going to impact the whole business, which I think is critical in having these conversations and thinking about where we're going to end up and what are the steps we need to take along the way. So can you talk a little bit about Bryn Mawr's sequencing and
Sure.
your experience managing change and embarking on this digital journey?
Sure, I'd love to. So just a little bit of background. My background is heavy in the tech side. I spent a decent part of my career in aerospace and defense. I was a coder, enterprise architecture, security, all that fun stuff. Got into banking about 8 years ago, and I've loved the business aspect of it for quite a long time. I recognized the reason I like technology is that I can use it to help people, help businesses, right? Help our clients, help our employees. And when it came to our nCino, my first knowledge of nCino was actually during even my interview process at Bryn Mawr Trust. I've been with the organization since the beginning of 2019, so a little over 2 years. And nCino was already selected as a key technology partner for us in our digital transformation and our digital journey for our future success. When it came to that, one of the things we needed to do was quickly rally around as an executive team and figure out, why are we doing this? Let's set some clear objectives for what we want to accomplish strategically with our partnership with nCino as a platform to interact with our clients and to improve our processes. We knew one of it was to provide just first and foremost a great client experience. We wanted our clients to be able to go online and apply for products and services, and as we interact with them digitally, we want it to be as seamless as possible. So we knew we wanted as much automation out of that. So that client experience was really what was driving it, but we knew that would also then help lead us to another goal, which was operational efficiency. Because if you provide an easy, simple, fast experience, it's typically highly automated, which creates efficiency, particularly at scale. In addition, we knew the value of increase capacity for sales. We wanted to make it not just easier for our clients, but easier for our employees and our associates, so that they could focus on serving the clients' needs and improve their capacity to serve more clients, so they weren't bogged down by a lot of the busy work that could be done in a more automated fashion. So we wanted to make the lives of both our operational back office folks as well as our client-facing sales folks as seamless and as easy as possible as well. And then last but not least, my background prior to joining Bryn Mawr Trust was the chief data officer at BB&T, now Truist. So we knew data was going to be important, and getting new client insights and insights into our processes and where we could gain efficiencies in the future. Because we knew it wasn't going to be a once and done, we're going to implement nCino and it's going to be perfect day one. We knew it was going to continue to evolve and continue to mature, and to help drive that maturity and evolution, we were going to need really good data. So those were kind of the 4 goals we set at the very, very beginning. And then from that, we figured out, who are the key stakeholders and how we're going to break this huge program into several different segments. Because with nCino, we were implementing many different business capabilities. We knew we wanted to do online deposit account opening. We knew we wanted to do consumer lending. We knew we wanted to do small business lending. We knew we wanted to do commercial lending. All very big efforts in and of themselves. So we decided to not boil the ocean and try to take them all in one big bite. And we partnered with nCino to create a plan. And then as we learned through execution, modified that plan and eventually evolved into a highly agile approach for project management that focused on business capabilities being produced during each of our 2-week sprint cycles. And that was the accumulation of a lot of hard lumps along the way. It's not like we had this perfect process overnight. It's not like we had the perfect team overnight. But over the course of our journey, I feel like we're probably about as good as anybody when it comes to our ability to implement nCino and to integrate it highly in an automated fashion with our core, which isn't always easy because a lot of these core providers aren't as collaborative and as focused as what we're getting with our partnership with nCino.
Yeah, thank you. Just if I could interject there, because it's hard, it's why you need those leaders so bought in up front, right? Because you never quite know exactly what you're going to experience along the way. You got to make sure that you've got the buy-in from the beginning.
You got to get the buy-in, and you got to set expectations too. So like we figured out who are the key stakeholders. Obviously, we knew that was going to be important to partner well with our sales team. And there was different sales teams depending on the products that we were focused on automating and digitizing first with nCino. We also knew it was going to be important to partner with credit. Obviously, you can't get the full automation and automated decisioning without credit really bought in and compliance, and security and those key important things, and legal. All of these team members that have an important job to help us manage our risk and manage our operations successfully. We knew we needed to keep them highly engaged and partner with very early on. And then obviously even operations itself, as well as our core vendors and our other vendors, because we did about 12 different integrations, right? It's a great thing about nCino is it's highly integrated and interoperable with many other technologies. You got to bring all your partners together from day one. And as part of that, that's how I met you for the first time, right? I went to nCino, I'm like, this is more of a culture change than it is a technology change. Who can I bring in to help me communicate to my business partners the culture change? Because they're going to have to think about lending differently. They're going to have to trust the system and build processes, and they're going to change the way they work. And we may make them do more stuff in the front end they weren't used to doing. We may make them be a little more standard than they were used to doing, because if you can't automate 100 different processes, you got to try to streamline it to one or as few processes as you can, so that you can get that efficiency, both from a client experience, but also our bottom line experience. So that getting that buy-in, helping people understand why we're going to be asking them to make tough decisions, why we're going to be asking them to change how they work, and why we're going to be asking them to put information in the system at the beginning and not waiting to fix it at the end. All were important things that we had to get people bought into, not technology.
Yeah, that's very well said. Very well said. Can you talk a little bit about, so you had a terrific way of laying out what you wanted to achieve. You got your stakeholders bought in up front. Can you talk at a high level about some results that you're seeing, some of what evidences that maybe some of this work was worth doing, or how you think about the metrics or the goals that you had in the beginning and how your performance?
Yeah, I'd love to. It's one of the things I've learned early in my career as well that's really important for all of these projects is to not just set the high level strategic goals about efficiency and data and all that. Those are important to have your high level goals, but you need measurable business outcomes. That's what I like to call them, measurable business
Yeah.
outcomes. And I challenged 5 different teams. There was the 3 of the product teams and the credit team as well as our operations teams to come up with 2 measurable business outcomes that we could use as a baseline is this is where we're at today and this is where we want to be at go live with our new product or service with nCino. So in some cases it would be like auto decisioning. So we knew today we auto decision 0% of our small business loans under $50,000, let's say. And we knew at implementation, through our implementation, we wanted to have 95% of our small business loans to be auto decisioned under $50,000. Again, we had to set those guide rails and work with credit and the executive team on what were the right percentages and what is the right dollar figure to start from. And we said we are not going to go full automation day one. We're going to build an automated system, but then we're going to run in parallel with manual underwriting with the auto decisioning for 90 days and see how it's working. And then if we're happy with it, then we're going to take it to the board for a vote to change our credit policies to allow auto decisioning, because you got to always think about that, but your credit policy probably doesn't even allow auto decisioning. So you got to get all the way to the board level bought in that you have a good system in place and that it's working and managing risk appropriately. So that's just one example. Another big thing from an operation perspective is reducing the amount of defects or errors that would often get booked because people late in the game, they would the data itself didn't always have the quality that you needed from end to end, and would have to be fixed manually after the fact. We wanted to reduce that significantly. Actually, 90% we were reducing our defects by. So those are just a couple of examples of clear, measurable business outcomes that you knew where you were at today at like how many defects per loan you would typically have, and you knew where you wanted to be in the future. And you set a period of, we picked 6 months from go live to full measure. That was our goal, is within 6 months after go live, get to that number. So
yeah, that's terrific. I want to just kind of highlight 2 things you said there I thought were really powerful. Number one, you didn't ask each group for 100 metrics. You just said, just give me 2. So that makes it a little bit simpler at one level, but it forces the mind to really say what's important. Right? Like, what are we really trying to get out of this? And so if you say just 2 and be specific when you give me your 2, so not just we want to be faster, but we want to take our total time from this to this, or we want to say auto decision, we're currently at 0, we want it to be 100% or whatever it is. But really attaching numbers to it is a very important part of that measurement process. When I was a sponsor of an nCino project, when I was a chief operating officer of a bank, I remember that one of the things we wanted to do was be faster in terms of our time from approval to close for a commercial loan. And I asked our head of loan operations, I said, how long does it take us to close a loan from the time it gets approved to the time it's closed? And she said, well, we really don't know. I said, well, what do you mean we don't know? Like, we know when they were closed and we know when they got approved. So can we just add it up? Can we just take an average like for the last 6 months? And she said, sure. So we did that. And then we set a goal for like that turned out to be 52 days on average from time it got approved to close. And I said, well, let's just cut it by a third. And so that was our goal. Now, it was admittedly arbitrary, but it was simple and everyone could understand it. Loan officers could say, yeah, that would be great for my customer. That'd be great for me because I get paid sooner. Operations would say, yeah, that gets it off of our plate. So everybody could kind of see what was in it for them. The customer would get their money sooner. So, it was a very simple metric, just as an example of what you're saying. But it sort of had the effect of rallying everyone toward that one goal. We weren't all focused on a lot of different goals, but let's just focus on the one. And then once we achieve that, let's establish another goal. So,
yep, and those are examples of goals that we actually had as well in terms of the client, how long it takes to open an account, how long it takes to fund an account. There was a lot of clear measures, and you're right. A lot of times we didn't know what the baseline was, so we had to go measure it. We had to go look in the past and say, all right, how long does it actually take today? So we were able to kind of snap that chalk line, know where we started from, set a goal for the future, and then measure if we got there.
Yeah, great. Yeah, so you guys had that from the very beginning. You had your your measures. That was something you talked about very early on, and I would say that that also is a best practice. Don't wait till after you go live to start talking about what you want to measure. Talk about what you want to measure as you are building out the technology that you're building, so that you truly do have that baseline.
Yeah, I think it's really important after you've established your core team to do that exercise as part of the visioning, because it's like, if the goals are too ethereal and aren't meaningful, it's difficult to get buy-in from the rest of the team. But if you're involved and you understand how it's going to impact your life and make your job easier, there's going to be less defects, or it's going to impact the customer's experience, and that they can open an account a lot faster. It becomes much more real and not so fluffy.
Yeah,
and,
yeah,
usually
absolutely. Yeah. Yeah, I'll share a little bit about my experience as well. It sort of mirrors much of yours. First of all, I didn't do everything perfect my first time around, but one of the things that I did want to do is kind of what you did, which is to sequence our implementation. So rather than trying to do too much too quickly, we embrace this idea of small changes first, learn from those small changes, get buy-in, and then move on to bigger changes. So call it micro transformations, whatever you want to call it. But in our case, what we did was we said we have a small group of SBA lenders that comprise probably 10% of our commercial lending business. And I said, okay, let's put Encino in place for that SBA group, debrief from that experience. So let's say it took us, I'm going to say it was 6 months to from start to finish to get live on that. We were learning as we went. We had a debrief session after that before we then started talking about going live with our broader commercial business, which again was the remaining 90% of our business. And I have to say that by the time we finished that commercial project and started to see some of the benefits you were talking about, what was interesting is that word started to spread across the company about how transformative this was to the process and made our employees' lives better. It made our customers' experience better. It freed up our lenders to go spend more time with customers rather than trying to track down where their loan was in its process and that kind of thing. And so we actually had inertia going into that larger second project because people had heard about the great benefits from the small project. So I would just say that idea of starting small and then layering on wins as you go is a pretty important strategy to think about. Sometimes if you try to take on too much, that transformation can almost be bogged down because of its own weight, trying to change too much too quickly. But in fact, getting early wins in the beginning can create momentum and excitement in the rest of the company, because transforming is hard. And so having a sense of excitement and anticipation about where we're going to end up can be very important ingredients to make that leadership challenge even easier. We've got our third poll question here. What is your financial institution's top strategic business priority for the next 2 years? And consistent with prior questions, we add another answer every time we go. So we've got 5 potential options here this time.
We're testing you.
Yeah, if you had to say if you had to compartmentalize your top strategic business priority for the next 2 years, is it implementing new technology, embracing data analytics capabilities? Adam was just talking about the data. We could spend an hour on that because that is such an important ingredient of what you can get from these digital transformations to help propel in a fact-based way how your customers are evolving. Number 3, developing new products and services. 4, automating processes. Or 5, improving the customer experience. Now, clearly some of these overlap, but if you had to pick one, what would that be?
And again, I hate to influence others' votes, but I would definitely pick improving customer experience, just to be honest, right? So for me, implementing technology for technology's sake is never a good idea. You need to have a goal behind it. Even improving a process, again, sometimes there are clearly times you need to do that to get scale or to fix a customer experience or an employee experience kind of problem. But for me, it's usually you're talking about your employees or your clients. and trying to drive efficiencies through that.
Another way to think about this question is this is the kind of stuff you talk about in the beginning of your discussions about change management. What is it we're trying to achieve? What is the big pain point we're trying to solve for? And your answer for your institution is probably going to be different than the institution across the street. So it is specific to your culture, where you are in your journey as a company with your customers, and kind of where you've come from. What are those pain points? Where are you going to? So very interesting. This particular poll, the results are in. About a third of the people said automating processes was the number one strategic priority, will be the number one strategic priority. And my guess is underneath that answer is maybe we have different groups doing the same thing that are doing it different ways. So we're trying to get scale by doing it one way and making it more automated, so that we can take the routine tasks away from people, so they can focus on the things that require more analysis and mental energy, which is a common issue we see in the market. Follow closely what Adam said. Improving the customer experience got about a third of the votes, and then the other three options got another third of the votes. So automating processes, improving customer experience, and then sort of everything else was how those votes came in. Very interesting.
Yeah. And it all makes sense. As you said earlier, they all overlap. If you're drawing a Venn diagram, there's definitely a lot of overlap between them.
Yep. So as we start to wrap up here, there are a few tips that we would describe that are important to sustain a culture of change. I wrote a LinkedIn article recently where we talked about what's required to create a culture of change. And one of the things that's important as you embark on this journey is to ensure that you don't just have an ambassador for change. You don't just have a person who is responsible for that change, but making sure everyone involved in the process is embracing this culture of change. So as we talked about in the beginning, the number one tip we would say is to really think about this from a culture perspective. That starts with your leaders. It starts with the whole management team that's responsible for this process, if it's commercial lending or retail lending or deposit account opening, whatever it is, making sure that those leaders are aligned and accept and support the change. One of the things I found is that if somebody is quiet when you're having that conversation, there's a likelihood that they may not be supportive of the change. So having a conversation that sort of draws out, what are you worried about? What are some concerns that might crop up is an important conversation to have early. Secondly, as we said before, create understanding. How does this fit with everything else that we're doing? How does this fit with our strategic intent, with our vision for where we're going with the company is very important. Piquing the employee's interest is number 3, and that is making sure employees know what's in it for me, what's in it for the employees. Each group is different. What's in it for lenders is different than what's in it for ops. As Adam said before, what's in it for credit is another thing altogether. So make sure that they understand their role in the process and what's in it for them once this is all done. Build that commitment. Number 4, we actually ask leaders to state one thing they would do more of or differently to support this transformation. So what's one personal commitment that they're willing to make sure that the transformation is successful? And make sure you get those commitments from people that are influential. So whether they're at the top of the org chart or they're just loud voices that people listen to within each group, make sure you get those commitments. 5th is, we like to say, create a center of influence. So create a group that will be there to guide and direct your transformation, your business evolution as you progress through not only the build, but after the go live and beyond. They're there to help prioritize, debate, discuss which changes should be made in what sequence, so that transformation has a rudder. So that's a small group that would come together periodically to make those decisions. Adam, I'll let you take number 6.
Number 6 being don't settle for a single champion.
Yeah,
I think that's clearly important on any type of project period. I'd say, one person can't do it all. In particular with the technology like nCino, that's really a business transformation type of technology. You need all of those stakeholders, like I mentioned previously: credit, lending folks, operations, technology, risk. You got to get everybody involved pretty early, and let them have a voice. You need to have that culture of change and empowerment to allow folks to raise the concern. You can't settle for, as it says here, that single champion and just have one person on your project management staff meeting weekly. How's the culture going, or how's the communication going? No, it's everybody's job to be a champion for the change and to be honest if you don't think it's going well, and to put risks out there. We need to be able to talk about them in a safe way. So building that advocacy and that core team is really, really important.
Absolutely. And then the learning never stops, right? Like it keeps going. So
yeah, you got to be honest. Like I'm saying around, keep learning. You're going to fail, right? So expect that it's not going to go perfectly. Your little pieces might fail, but make sure you have that framework and that team rallied around you to prevent a bigger failure. So you identify the issues quickly and you hit them head on. So I'm sorry to interrupt. Go ahead.
No, you're right. You said it perfectly. I love this phrase too, stay humble. So, none of us know exactly what the perfect path is forward potentially, but if we've got the right commitment, if we've got the right buy-in, we got the right tools, we can figure it out together. So this idea of sort of an organic evolutionary transformation for the organization is a good recipe for success. So in conclusion, I would say we do have a white paper on the nCino website that talks about change management, something that I would encourage everyone, if you haven't downloaded that, to do so. It can provide some great tips and tricks. And with that, I'll pass it back to our moderator to just tee it up for Q&A.
All right. Hey, Greg and Adam, it's nice to join you guys for Q&A. This has definitely been a fantastic presentation. And I want to encourage our audience, if you have any questions, there's still time to get those in. We will try to address as many as we can. We've actually got, a little more than 15 minutes, so that actually gives us a good amount of time. So definitely get those in. So we'll get rolling. The first question is geared toward Adam, though Greg, you may have your own thoughts to add. And he asks, how does your bank manage the evolution of the nCino product as business processes change, and the technology is upgraded and you add other modules and that sort of thing?
Right, that's a great question. I think one of the important aspects of a project like an nCino, where you're automating a lot of business processes, is first thing you got to do is figure out how you're going to govern process change. So you got to establish that governance committee in the project, and you need to make sure it's operationalized longer term. So at the end of it, often I've seen on projects like this, and be it an HR project and a lending project, whatever, you're automating business processes and you're documenting them. You're saying you're getting agreement from the business of here's your new process for, in this case, let's say consumer lending. You need to understand who are the stakeholders, who gets to decide when it changes, and establish those relationships in that model up front. So one of the things that we've done is we have nCino business owners on the business side and technical owners within the IT organization on my side that meet weekly and regularly to review requests for change. And then if it's a change that what we call a standard change, we're using like an ITEL model, and we use ServiceNow as our change management solution. But if it's a standard change within the realm of that group, they can make that decision. If it's a non-standard change, it will require a special review from risk and compliance and credit and the like. But we actually have to establish that governance and be thoughtful about it up front, both from the who's going to be involved and what's a standard change and what's not, so that you can automate, the simple, I need to change this wording, versus something that's more complex and requires legal or credit review.
Yeah, I would add on to that, Adam, that is absolutely the number one thing I would recommend. So I'd double down on that. But it's especially important because this is not the only thing you've got going on. There are other big projects that are likely going on at the same time. And so not only just how do we prioritize within the requests and the evolutionary needs we have within this particular project, but how do we sort those with all the other projects that are going on? It becomes a pretty powerful thing as well. And related to that, you said something about establish it before you go live so you can have it after you go live. Sometimes we can get sucked into thinking that this is all over when we go live.
Yeah.
And it's really not. I mean, that's actually the opportunity to start the evolution. So that's a big moment, certainly when you go live and processes change and whatnot, but the opportunity to continually get more efficient or to get more revenue or to continue to do things faster and better actually starts when you go live, which is why that particular governing group becomes really important to have a place to have the healthy debates about what should be next and should we make an improvement in our credit process before we make improvement for operations, or is there something that the lenders want? You know, all those kind of things are important discussions to have. So, yeah, that was really well said.
Yeah.
I was going to say, Adam, we've got another question geared toward you, though, Greg, I'm sure you've got your own point of view as well. Which stakeholder group have you found to be most resistant to change at your bank, and how did you overcome that?
That's kind of funny. See, I was very blessed and fortunate where I started, my journey here at Bryn Mawr Trust. There was a lot of other new leaders that had joined the institution, both from a credit and a commercial lending perspective. I would say in general, commercial lenders are going to be probably the toughest. They have very challenging, very difficult jobs, and they're used to doing it a specific way, and you're now asking them to do it a different way. I think typically on the retail side, you'll find they understand the notion of efficiency, and they often have a very standard approach. I think some of it depends, again, on your company size and culture, but I would generally say within the realm of what we've seen, your lenders, because it's really going to change. We really changed how they needed to work and some of the data that they needed to collect versus maybe they were able to delegate to others in the past. Change isn't easy for anyone. It's easy for me to just say, I'm going to plug in these systems and hire an engineer to go run them. They're the ones that, like, literally their job is changing every day. So they think the people that have to change how they work the most, and in our case, it happen to be the commercial lenders, are going to be the folks that you really need to get buy-in from early and help make sure it is a good experience for them. Because if you deliver something that's difficult, they will let you know, and they should. So make sure you get their buy-in early would be my recommendation.
Yeah, I agree with that. The lenders are typically the rainmakers. They're the people that are closest to the customer. So,
Yep.
I like to say that resistance is born out of, not because I'm a bad person or because I don't like what we're trying to do, but it's typically born out of me trying to protect something I care about from something I don't understand. So whoever it is, whether it's lenders or credit or operations, until I understand how this is going to impact my customer, my job, my group, my company, I'm going to have a hard time getting bought in. And I agree with Adam. We find that lenders are a particular group, especially commercial lenders, who are probably prone to resist because they're trying to protect their customer. They're trying to protect themselves. It's actually natural, quite natural. The second group that we find a lot of times resist are credit. If you think about it, credit is there to be the guard at the gate to protect the company from all risk. So, kind of Gandalf at the past there in Lord of the Rings, that's credit. And so until they understand how this is going to make their job better while still protecting the company from all manner of risk, they should resist. I mean, they should be people that would ask a lot of questions. And so to Adam's point, if you can address those questions or issues or draw them out from lenders and credit early, you're better off later in the project because those questions are going to come up. That resistance is going to happen. It's just a question of, do you deal with it early or do you deal with it late? And we would strongly recommend get that buy-in early.
Yeah.
Absolutely. Well, another one just came in. Really, it's geared toward setting the right tone at the top for leadership. You guys mentioned some things like, making sure you keep it simple and give some, provide some simplicity and direction. around that. But are there any other important tips on how leaders can set that tone so change management is effective? You're building the right culture and environment.
Yeah, Adam, I'll take that. Just one that comes to mind that we see often either as a source of challenge or something that's a big enabler for successful transformations, and that is leaders need to set the tone that there will be a day that we're going to set this tone very early. They can say there's going to be a day after which every deal has got to come through, in our case, Encino. And after that day, the old process will be shut off, the old systems will be shut off, and everything is going to be the new system, the new process, the new way of operating. If you try to stay in both the old environment and the new environment for a prolonged period of time, you end up inevitably with lots of organizational confusion, lots of process confusion, and typically your operations group is trying to close deals that are coming in from multiple sources, and it's just very, very confusing, and you end up slower, not faster. So we like to say, make sure you cut off the old way of operating so that everyone is very clear that we are moving north. We are all moving together, and whatever you need to do to get ready for that personally, go do that. You got plenty of time to take advantage of the training, to supplemental, training, whatever you need. But make sure that on that day that we convert over, you're not left behind.
Yeah, I think that's a really good point, Greg. I know I'll channel my inner Liam Brickley, who's our chief credit officer, that would say, you want to sink the old ship or burn it, right? So they can't think that they're going to go back to it. Because if you keep that old application still running and they think that, well, maybe this Encino thing will fail and I can just jump back to the old one, you're going to have a problem. You really want to be committed. The other thing that came to mind too that I didn't really highlight it or mention is we have a governance and steering committee for the Encino program itself. And in there you have the CEO, you have the president of the bank, you have a lot of their folks I mentioned, including finance, because it's also important that you understand the financial implications, because this is typically not going to be an insignificant investment at the corporate level and the board even visibility typically on a project like this. You have to understand and set expectations on what the actual costs and time are going to be, what the value is going to be achieved, and you have to hit those targets. Just because it's not easy. And even from a sales goals perspective, you have to have that discussion at the executive level as hey, this sales team, the credit, as well as we talked about, the commercial lenders, they're going to go through a big change. There's going to be a month where they're training and learning a whole new way of business. You might need to relax some of those goals, and that's not an easy thing to say. And there may be deals that you used to do that were custom, that we're not automating things. There may be some deals we used to do that we're either going to have to walk away from or you're going to have to do outside of the Encino system, but you're not going to do a lot of them because that's going to be manual. So you need to have those honest discussions at the executive level often and early and remind people of them, as I do on every steering committee, and they get annoyed by it. But it's like these are the challenges that we're going to have to overcome, and let's just make sure we're still in agreement that we're accepting these risks and challenges and driving through it together.
Great. Another question that came in had to do with integrating with core providers. I mean, obviously that's an important piece of the puzzle. So how does change management extend to considering those external providers that you're also working with?
No, that's great. I think one of the things you'll have to figure out too is within your own team, do you have the competence to manage an integration of the complexity that you might run into with something like Encino? You need to understand, do you have the project management discipline? Do you have the technical integration discipline? And if you don't, you might want to pick an integration partner to help you through that. So I think that's one of the partners I'll specially talk about as an integration partner that you may or may not need depending on your existing team skill. But regardless of that, if you do pick an integration partner, they need to be at the table just like everybody else, and they need to have an equal seat and equal say, and they need to be a true trusted advisor as part of that relationship. Now, when it comes to your core providers and your DocuSign and OneSpan and your Experian credit pools and all these other, we have like dozens of integrations. My approach was to pick. I asked Encino, what works? What have you seen work before? That's probably who I'm going to go with. I don't want to be the trailblazer. I'm already doing enough trailblazing in certain aspects. So I don't want to trailblaze everything. So I tried to go with proven solutions wherever possible. There were some things that we were willing to trailblaze, but we didn't do everything. So I think it's important to have those open discussions with your partners and try to pick proven solutions. And again, be honest, have a good project manager, hold people accountable, escalate issues quickly when they come up. Your standard project management stuff's all really key.
Yeah, Emily, the only thing I would add to that is that we suggest having a structured communication plan that addresses every audience that's going to be impacted by the transformation. So, for example, lenders are an audience, credit, ops, like we talked about, but your integration partners are an audience as well. And so having an intentional, regular check-in communication plan with them so that you're not blindsided by them and they're not blindsided by you along the way is really, really important. Because that's a critical piece of ending on time and on budget for your project, and then having a healthy relationship post-project. So communication, we have found to be we haven't talked about it today, but in my mind, it is a critical element of making sure that you not only get the buy-in, but you sustain the buy-in. And then importantly, if you're not communicating, what most of us humans do on something's very important. If I'm not hearing anything, I'm going to assume something bad, right? I'll fill it in with something dark. And so we like to say communicate proactively with all of these different audiences about what's in it for them, the 2 or 3 things that you expect of them along the way, so that they know when it's time to act, they're prepared and they're excited and they can make sure they do what they need to do. That includes your third-party integration providers.
Yep. Well, along those lines, another couple of questions that came in, Greg, really geared toward how nCino, the role nCino plays in terms of change management for the banks it works with. First, whether nCino subscribes to a particular change management methodology, but also just generally how you work with a bank to support the change management going on within their institution.
Yeah, thanks for asking. We have a change management approach that we certainly use. It's got 8 pillars to it that we believe are important to cover in every digital transformation. Most of the change management programs that you can see on the market have some degree of overlap and similarity. We love all of those. We think they're all time tested and proven well. Many of our partners like Deloitte and Accenture and others have their own change management programs, which we embrace and support. If nCino is helping a financial institution to lead and to get live, we make our change management program part of the project. So it's an integral part of the project, and it starts with what we call a boot camp. So it's an intensive, 1-day experience for the leaders to come together and talk about the things that we've talked about here. Very structured, but with unique outcomes that are tailored to the culture of the organization. And then we have regular check-ins and follow-ups throughout the project and beyond to make sure that the commitments that we made, that the objectives and the metrics, that the communication plan, that the testing plan, the training plan, all those things are happening as we talked about in the beginning of the project at the boot camp. So we sort of kick things off with this sort of more intense workshop, and then we have regular check-ins along the way. But for us, it's a critical component of making sure that customers have a high chance for the ROI that they're looking for this investment.
Well, gentlemen, I hate to say it, but we're coming in on the 2 o'clock Central, 3 o'clock Eastern time. So it's time to wrap this up, but I want to thank you for taking these questions. They've been fantastic. Thank you to everyone out there for asking them. As a reminder to everyone out there, you'll receive the recorded version of this webinar within 24 hours via email. We'll also post it on bankdirector.com and nCino.com. I want to thank Greg and Adam and nCino for co-hosting today's webinar, and thanks everyone out there for joining us today. Have a great rest of your day.
Thank you.
Thank you, Emily. Thank you, Greg.